Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this morning at around about 10:30, markets have succumbed under pressure, and in fact we have broken some crucial levels on the Sensex Nifty and Bank Nifty. Before I go any further, let me give you certain levels on Spot Nifty, Sensex, Nifty Bank, Rupee Dollar and crude oil. Sensex down about 1070 odd points and the level is 78,650. Nifty down 340 points, 23,965 is the level on Nifty Spot. Bank Nifty down 380 points, 51,290 is the level on Bank Nifty or Nifty Bank. Rupee Dollar and crude oil, well, 0.005 paise strength on the rupee against the dollar, and the level is 84.07. A little bit of spike up since last week on crude oil. Brent is trading at about $74.28 to a barrel, and NYMEX is trading at about $70.69 to a barrel. First, on the crude oil and rupee dollar equation, I think more or less this is going to be the range, depending upon what the outcome or the news flow is from the Middle East. As we all know, over the last many months, the situation in Middle East is the driving factor of the crude oil prices, either on the upside or downside. And as far as the rupee dollar equation is concerned, we mentioned last week as well, 84.10, 84.15 on the weakness rupee. You might see some dollar selling coming in from banks and RBI. And on the lower side, possibly we could see levels of 84, 84.05. So that's going to be the broad range for the rupee dollar. On the Brent and NYMEX, difficult to predict, but yes, news flows will be the driving factor, as I mentioned, for crude oil prices as far as the situation in the Middle East is concerned. Now coming to the markets. Over 10% correction from the all-time highs on the Sensex and Nifty and possibly on the Bank Nifty. Reason attributed, couple of them. First one is the primary market lineup. This week as well, we have got big IPOs opening up for subscription, including Swiggy. Second one is a little bit of lower side number on the Q2 earnings, which has actually deepened the concern for the markets, at least from the short to medium term point of view. Volatility index, India VIX, has spiked up today, so that is also one of the reasons why the markets have seen a sell-off, and short side the positions getting built up. US elections tomorrow in the United States of America for the next likely president of the United States of America, and the outcome of that is something that is actually playing a larger part as far as the global sell-off is concerned. Not only our markets, but I think markets across the globe are witnessing this kind of pressure. There are a lot of permutation combination. There are a lot of views that have been put out. If Kamala Harris is going to be the president, what will be the outcome? And if again Mr. Trump has to regain his supremacy and become the president, what is going to happen, etc., etc. So I think today, tomorrow, there is going to be a lot of choppiness, volatility as far as the outcome of United States presidential election is concerned. And of course, two more factors that have been, one of them already elaborated, situation in Middle East and the FI selling. A record historical number passing 1 lakh crore on the sell side from FIs, and similar buy side figure from the domestic institutions. So this is going to be a push and pull kind of a scenario as far as FIs and DIs are concerned. And of course, more importantly, the reaction of US presidential election and what is going to be the view as far as the large institutional foreign players are concerned. So, and of course, not to forget, last week, in fact, when we were giving out our market outlook, we had mentioned two levels on the lower side, 24,000 and 23,800. Now, 23,800 becomes the larger crucial factor, because this was the level which we were finding it difficult to cross over. And then once we crossed over, we know the history. I don't want to go into that. So if 23,800 is taken off, then you might see the sell side pressure getting aggravated, and in that kind of a scenario we can possibly see some more lower levels. FI selling, large selling, big selling, large ticket size selling possibly is in the price. Whether they will sell some more, well, there is all possibility that there might be some more selling which is still left as far as the FIIs are concerned. And then of course, the outcome of how the Q2 earnings have been, and of course the policy decision from the government and the situation in Middle East. So overall, markets can be under pressure for a couple of more days given the global news flow backdrop is concerned. In terms of valuation, well, we believe that large caps have become more attractive now because primarily whatever selling has been done from the large institutional players was focused and concentrated in the benchmark stocks, that is Sensex and Nifty weighted stocks. Mid cap, small cap will definitely suffer its fate, especially the small cap and micro cap universe, because of the speculative build-up that has been there. Changes from the regulator also has impacted the market in terms of the positioning of futures and options is concerned. So overall, we are in a situation where the markets which were looking a little bit richly valued at higher levels, all-time high, and with this 10% plus correction, some of them have become attractive. Hence, our view is that you should primarily look at large cap stocks with a long-term investment idea. What could be your approach? Well, approach has been fairly and very clearly laid out in front of you all by us. Don't think that there is no tomorrow and put money into the market, invest in the market. Staggered, step-by-step investment is the best approach in this kind of a situation when we really don't know what kind of situation will evolve as we go forward from here, at least from an immediate short to medium term point of view. So try to accumulate stocks. If you are holding your portfolio, if you have the confidence and if you have a long term time horizon, and in case if you got invested at higher levels and you have investable amount, I think this is the time to open up your purse strings and start deploying 10, 15, 20, 25%, 30%. For those who have elevated risk appetite, can definitely allocate more towards direct equity investment. And just in case if you have opted out for mutual fund route, lump sum or SIP, then our sense is that you should possibly start allocating large part of your investable capital towards your investments into the SIPs and the large lump sum investments. Year-end rally is what some people are expecting after this kind of a sell-off, but I think I will take everything with a little bit of cautious but optimistic approach. One can possibly, then there will be talks about year-end FI selling, but a large part of the selling is done, and because of the, for them the financial year-end is the calendar year-end. November, December can see, entire November and possibly first 1 or 2 weeks of December can see a little bit of elaborated sell side number from the FIs. In terms of performance, sectorial specific, I think it will be the best approach: cap goods, engineering, cement, banking, public sector, private sector banks. Some select names in the pharma, diagnosis and hospitals, I beg your pardon, healthcare related, could be the sectors to watch out for, including information technology being a part of that. But try to have a staggered approach as far as your investment is concerned. Expectation should be scaled downwards as far as the returns are concerned, given the kind of present scenario. But just in case if there is a change of mood and stance, and if we do see money coming back into the market, well, domestically there is no problem as far as liquidity is concerned. It is only the question of FI selling, relentless FI selling for the entire month of October and beginning whatever days of November that we are seeing. So try to build up a portfolio, and we have two investment ideas as we always give in our weekly market outlook. The first one is from the pharmaceutical pack, and we believe that pharma and IT are the two maybe sort of chased after sectors in this kind of a situation when there is a sell-off like this. Cipla is the name that we have been optimistic on the fundamental side from long-term point of view. And the company continues to do well as far as quarter-on-quarter, half-yearly and yearly numbers are concerned. Post the second quarter numbers, the outlook remains extremely positive as far as the management commentary is concerned. So the first investment idea is from the pharmaceutical pack, Cipla. Second one is from the Second one is from the auto ancillary name, Endurance Technology. Well, year-end launches can be a little bit few because whenever we approach the months of November and December, automobile manufacturing companies try to delay their launches to the next new calendar year, that is starting January 2025. So this could be the most appropriate time, and in that case, of course, the auto sector suffers sell side pressure, then the replication of that is definitely seen on auto ancillary OEM, battery and tire manufacturing companies. But whether that should deter you from your long-term investment objectives and goal, we definitely don't think so. Hence, we have identified auto ancillary company called Endurance Technologies. This company also has been consistently performing quite well as far as numbers are concerned, quarterly, half-yearly and YOY is concerned. And we believe that the future launches and the areas where Endurance Technology operates will be of more crucial importance for not only Endurance Technologies but also for the relevant automobile vehicle manufacturing companies. So these are the two names, friends, Cipla and Endurance Technologies. Mind you, needless to say, these are long-term investment ideas. These are not BTST, these are not short-term, medium-term. These are effectively 12, 16, 18 months plus kind of time horizon investment ideas. So you need to have that kind of time horizon. And as we mentioned in our opening remarks, that staggered approach, start at current levels with some percentage of your investment into these two companies, and then of course gradually once you get correction you can go on allocating more investable capital to these names. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye bye.